Netflix set to report earnings tomorrow right here. Stock has had a strong run so far this year, up 44%. But can the hits keep streaming? Let's bring in Laura Martin of Needham and Company, who has a buy rating on the stock. But Laura, you also got a $700 price target that's right where it is. So has the story shifted back toward sub-growth, particularly international sub-growth? What does it take to hypothetically get you to raise your price target here?
I think the most important thing we're listening for tomorrow is they added 23 million new subs from this paid sharing, but they didn't increase any of the engagement hours. Engagement only went up by 1%. So what we need to hear here is what's going on with average engagement, because that's what gives them pricing power, that people are spending more hours on Netflix, not less. So pricing power is dependent on engagement lengths per person, per household. So we need to hear that. We need to hear that they're going to raise the price on their ad-driven tier, which is the lowest of all the streamers for the ad-driven tier. So that's another price increase. Otherwise, I think people are, increasingly hitting all-time highs here. We have investors concerned about the fact that they may not be able to hit the $23 sort of bogey for next year, or even the $19 for this year in EPS.
So what if they say that they're not increasing the ad pricing because it's not like the ad environment is, extra robust right now, and they want to get traction going in? Does that cause you to back up and say, okay, well, it's been a nice run, but I'm not betting on it going too much higher?
Yeah, I think that definitely gives pause to this year's $19 a share that I think the market's looking for. Already, they've guided to $9.72 billion of revenue for the quarter they're going to announce tomorrow. The street is already at, I think, 9.78. So the street's saying, no, they're being too conservative. Well, if the street isn't being too conservative, these all-time highs are at risk for Netflix stock price.
All right. So takeaway here is the bar is very high, especially after we've seen big gains in the stock so far this year. We also know that the ad tier isn't going to meaningfully offer much to the revenue picture until perhaps earliest next year. So in the meantime, how much do things like live programming matter?
So live programming in our cost center, I think it's really important to drive new subscriber growth, but probably at the paid end. Usually for sports, as you know, people have to pay a premium. So they're going to give you 2 NFL Christmas Day games for free. But if they do go more into live, I would expect them to charge a premium for their lives, especially sports, because of the cost of sports rights.
Is there any possibility that Netflix starts to see more increased competition from some of the other more traditional players as they begin to tighten their belts and reach for profitability, and the market perhaps here begins to mature?
Yeah, I think that's one of the reasons they're keeping the ad price so low, is that adoption rate has been slower than they thought. Not only ad revenue, but just the adoption rate of the cheaper tier has been slower than they thought. And I think that's all about competition. Like Deloitte says that the average U.S. home has 4 streaming services. But if you ask TiVo, they say it's 5 streaming services. Average price now just for streaming, $60 to $80 per home. So absolutely, I think consumers are being taught to churn out of things that they're not using, including Netflix, and move month to month, depending on where the best content is for that month.
Laura, you got a buy on Apple, $260 price target, I believe. And it seems like every few days there's been a conflicting report about the lead times on the iPhone 16, people trying to extrapolate that to demand. Are you paying any attention to that? What part of your thesis is driving your price target now?
Look, I think the biggest question for Apple is China, which is 18% of their demand, and who the president of the United States is and what tariffs are going to be on China is the biggest risk to Apple, way more than the thing they can control, which is the 16. I think the 16 is going to be disappointing, but because generative AI isn't here yet, those capabilities, Android's ahead of them on that. But I don't think that's the big risk to Apple shares. Trump is ahead in the betting polls now. He has said he's going to impose somewhere between a 20 to 60% tariff on China. Unfortunately, I think Disney and Apple become pawns in that geopolitical drama between the U.S. and China.